315 now. Favor, are you still
Calculator.
there? Interesting. So, how many percent increase for the variable cost? Quickly, let's move. We must complete this question, right? We must complete this question, whether devil like it or not, right? We must complete this question. This question is 25 marks. Okay. Oh. So this
So
is,
we are here to correct total cost for selling price.
we are here to correct what?
The total cost for selling price, sir.
Oh, that's true. The total cost for selling price. Quickly, just give me the figure. Oh,
Okay, for year one, we have five million
Year one
six
is
hundred and seven.
just one person to just give me figure, so I will move on, please. Year one is
Year
what?
one, 5,676,000.
676,000. Okay. Year two,
6,812,000.
6,812,000. Next,
Year three, 5,790,000.
790. Next,
6,920,000.
6,930,000.
930.
God bless you. Thank you. Okay. Now the fixed cost will increase by what? The fixed cost will increase by
3.5.
3.5% per year, right?
Yeah.
Please mute your mic. Mute your mic, please. 3.5%, right? Per what? Per year, right? We increase by 3.5%. So do the same thing. 3.5, please just give me figure. I don't want to do any calculation now. 3.5 will increase by 3.5 per year, right? So give me figure, please. Figure for year one, 3.5.
it should,
Oh,
776.
776. Now, sure say I know I will not calculate all this thing by myself.
Year two,
803.
803.
832. 861.
Thank you. You can mute your mic. Total fixed
So that's the
cost.
total fixed cost. The fixed cost is in thousand and not per unit. So
Okay.
yes.
Okay.
So we're having 776 250.
Okay. That's fine. So the fixed cost is in thousands, right? Okay. That's fine. Let me just, okay, it's in thousands, right? So this will be 000. Okay, we can move
It's
ahead.
total.
Yeah, okay, that's fine. So having calculate this class, so the next step is you can see the way we are following this question, right? Now, at the end of the 4 year, machinery from the project will be sold for scrap with what? 400,000. In some question, you may be told that even this scrap value, you need to increase this, right? In some questions like that. Now, but in this question, we're told that it will be sold at the end of the what year? That is the scrap value. Now, the next one is tax allowable depreciation class. See, I beg you in the name of God, right? When you see any PM question, don't rush. Just calm down, right? The first thing is that read the required. See, when you understand the required, it is assumed that you've solved 70% of that question, right? There will be difference between someone that just collect question and start immediately. We want to because he or she see one of the question that they did in class, want to do it sharply. Please read the required, understand the required, then you move. You will now read the question, you apply the principle, right? You apply the principle, please. Now, the tax allowable depreciation, right, on this project E is on reducing balance method, right? 1 year in arrears. Is that not so? A balancing charge or allowance is available at the end of the 4th year. Of course, yes, there will be balancing charge or allowance. Why? Because there is a scrap value at the end of the period. That is where we now know, is it a balancing allowance or balancing what? Or balancing charge, right? So this will take us to another workings, right? So we move to another workings to, okay, this will be work 2, right? This will be work 2.
Excuse me, sir. Excuse me, sir.
I'm with you.
Sir, that fixed cost that you raise power to 1,000, others are not raised to power 1,000. I hope it won't affect the final figure. But it's supposed
No.
to be in full like the others. Yes, sir.
We'll write it in full when we get to. This is just workings, right? So when we
Okay.
bring it into the main work, we can put the total. We'll put the total amount.
Okay.
Yeah, thank you.
Okay. Thank you.
Yeah, thank you. So now, what is the cost? Now let's quickly check. What is the cost of this asset for project E? Is 5 million. The cost of this asset for project E is 5 million. Right? Is what? Is 5 million. That is the cost of the asset class. Now we go there, we now do the usual, right? What is the usual? This will be cost. The cost of the asset is how many million? 5 million, right? 5 million. So the capital allowance, let me put here to be here will be numbers of years. Okay. Year 1. Let me just say yes. Here will be CA, not continuous assessment. So here will be tax savings. Tax savings. Here will be what? Tax deal. Right? To start. In the first year, year 1, that is year 1, you charge capital allowance. And the capital allowance is on what? Is on reducing balance method. I'm coming. I'm coming. You can't see my screen. Your network. Please confirm. Please, can you see my screen?
Yes, sir.
Yes. Yes.
Okay.
Yes, sir.
Yes,
Okay.
sir.
Okay. So now, when you look at it, let's go back
You can
again.
zero. You
No,
can
let's go
zero.
back again. Let's go back again. You can see it is 25% reducing balance, right? Instead of charging depreciation, you charge capital allowance, 25%. Then don't forget that it is the tax rate is 28% in arrears. Now, I'm coming now. So we can have here the CA, the tax is 28%, just like the way we did the first question, right? So the CA, which is the capital allowance, you charge capital allowance on every year. CA is 25%. Please don't write CA in exam. CA means continuous what? Assessment. So 25% on reducing what? Or reducing balance. So you charge 25%. What is the 25%? Or 5 million? Quickly, what is the 25%?
1,250,000.
Okay, I'm coming. Before we move ahead, Oluwapemisire,
Yes, please, where did you get the 5 million for the cost? I'm trying to find my way around in the question.
but do you have the question with you?
Yes, I have the hard copy. Yes, I have it.
Okay, okay. Okay, mute your mic. Okay, now this is it. This is the 5 million. See, look up, you can see this is the initial investment. This is net present value, right? This is initial investment, and this is what? MPV, right? Initial investment. You can see 5 million. So now let's quickly move. So please, what do we have? Quickly. Figure.
1,250,000.
1,250,000. 1,250,000. So the capital allowance is 1,250,000. It's not actually easy like this using a word, but we just have to use it for this period. 125 like this, right? So you charge capital allowance, right? Your tax savings will be 28% of the capital allowance. Class, what is the 28% of capital allowance? What is 28% on capital allowance?
350,000.
350,000. Rachel, are you still in this class? Okay,
Yes, sir.
thank you. So now, don't forget that the tax is being paid in arrears, which means that year 1 will be paid in year 2. Year 2 will be paid in year 3, right? So you will not put anything here. Then we'll move on. Year 2, right? Year 2. Now don't forget that this will be your what? Your tax what? Your tax written down value. Class, what is the difference? What is the difference? TWDV. What is the difference? So this will give us
2,000,000. 750,000.
3,750,000, right? 3,750,000. So we come down here and say year 2. So you charge CA on this capital allowance because it's reducing balance method, right? Reducing balance method. Class. So what do we have? What is the figure? Quickly.
937,500.
Okay, 937,500. Okay. So please charge. Okay, sorry. This is 937,500. Okay, charge 28%. What is the 28% of 937,500?
262,500.
Okay, good. Two 262,500. Right? So year 1 will be paid in year 2, right? Because it is in arrears, right? So which means that the tax will be paid in what? In year 2. Is that not so? And that is what the tax says, right? So when you want to pay the tax due, year 1 will be paid in year 2, year 2 will be paid in year 3. But the tax savings will still remain the same. Year 1. Your year 1 tax saving will still be 350. They did not tell you that the tax savings will be in arrears. They say it's the tax that you will pay. Is that not so? Is the tax that you do what? That you will pay. But the enjoyment, the savings that you will enjoy, right, will still be there, class. So what do we have? Tax written down value. What is the tax written down value? Quickly.
2,000,000.
812,500.
2,800,000
812.
812.
500. Yes, 812,500.
Thank you. So, well, we can
Correct.
still 2,812,500. Okay, good. All right. Okay, this is a sorry. So year 3, right? Year 3. The CA again, you charge capital allowance since it's reducing balance method, right? So what is the CA of this? Quickly, class, quickly.
703,125.
What do you say?
703,125.
703,125. So here we still be 703,125. So you still charge. What is the 28% of the CA of the capital allowance?
196,875.
196,875. Right? So sorry. Tax due, year 1 will be paid in year 2. Year 2 will be paid in year 3. Right? That is the tax. If you want to pay your tax, 1 will be paid in year 2. Year 2 will be paid in year 3 because it is being paid in arrears. Class. So having done this, what is the tax written down value? What is the difference? What is the difference? Don't forget, we must complete this question today. All right.
2,000,000.
What do you have?
2,109,375.
109,000.
375.
Okay, 375. Okay, good. Now you can see that in the final year, right? There is a scrap value. Class, please pay attention to this part. The year at which the year at which you dispose an asset, you don't charge capital allowance. You don't enjoy anything. The year at which you dispose an asset, you don't do what? The year at which you dispose an asset, you don't charge capital allowance on it. The only time you charge capital allowance on it is when there is balancing allowance. The difference between the tax written down value and the sales proceed. It can either give you balancing allowance or balancing charge. If it is balancing charge, you will pay tax on it. When we get to the full this thing, we'll see how we will do that, right? But if it is an allowance, right, you have a balancing allowance, you claim capital allowance on it because you make a loss on that disposal of that of that particular asset. Class. So we're told that there is sales proceed, sales proceed. So we need to check the sales proceed of this asset, right? We need to check the sales proceed. So let's quickly check what is the terminal value. Don't forget that another name for it, the scrap value or the sales proceed, we can see is 400,000, right? It's 400,000. Comfort, are you still in this class?
Yes, sir. Yes, sir.
Okay, 400,000. Right? You can see now they have a tax written down value of that asset. The worth of the asset is 2,109,000. Now, when they want to sell this particular asset, they sold it at what? 400,000. What do they have? Is it balancing allowance or balancing charge, class? Is it balancing allowance or balancing charge, class?
Balancing allowance.
Balancing allowance. Why? Because the tax written down value is greater than what? Is greater than the sales proceed, right? Balancing our what? Balancing allowance, class. So what is the difference? What is the difference? Balancing allowance. What
I
is the difference?
don't.
What is the difference?
1,000,000.
Okay, I'm coming. The difference,
709.
Okay, I'm coming. The difference is 1,000,000
709 375
709 709.
375.
Okay, 375. Okay, that's fine. Okay, so since this is balancing allowance, you can see balancing allowance is when the tax written down value is higher than the sales proceed. All right, and the sales proceed at the end of the year is 400,000. So which means that the company will claim capital allowance on this allowance because they didn't make profit on that disposal. Don't forget, if it is balancing charge, you don't need to charge any capital allowance on it again because it is a cash inflow, right? The relevant tax authority will remove, will collect tax on that balancing what? On that balancing charge, right? We'll get there if there is question for that, right? So in this case now, since there is balancing allowance, is that also? So we have balancing allowance. So you charge, there will be a tax savings on it. So class, what is the tax? 28% of this. What do you have? What is the 28%?
478 625.
For
478 625.
okay, 625. So this will be paid in year 3. When you want to pay your tax, you paid it in what? In year 4. Don't forget, year 1 will be paid in year 2. Year 2 will be paid in year 3. Year 3 will be paid in what? In year 4. Right? And this is all about the calculation of tax savings, balancing allowance, or balancing charge, right? So now the next thing is to populate it on, put it in this format, right? In the usual format. So how many years do we have? It's 4 years, right? So do we have anyone that have questions before we move ahead? Because the next one we'll look at now is the capital rationing part of it. I know most of you are waiting for that part as well. Although this part is also important because it carries what? How many marks? It carries 14 marks. Imagine 14 marks, no be more you, right?
I want to digest the rule guiding the terminal year.
You
I,
want
I
to,
didn't get you, my. The rules guiding the terminal year. You
oh,
are saying
okay,
something, my
okay,
network
okay,
went off.
oh, okay, that's fine, don't worry. I'll explain that, right? All right. So what is the name of this company? What is the name of the company? What is the
Is it
name of
not
this company? Okay,
God?
okay, okay, OAP. Okay. So please, your presentation, is very important. You present your work very well, right? OAP. Now, the rule guiding it is that when I'll come back to that, sure, I'll come back. So now the next one is the sales, your sales, right? I'm seeing some people are using profit after tax. Your capital project is cash flow, does not make use of accounting profits. So when you now deduct something, maybe you deduct sales from some from variable costs, you now say, oh, profit before tax. No, you don't use that language here. Why? Because this is a capital budget, right? This is capital investment. It makes use of what? Cash inflow and cash outflow, right? So when you want to speak the language, you don't use profits. You don't use what? You don't use profits, right? So this is the sales, right? I'm coming. This is the sales figure, right? So we'll go there to copy the variable costs, right? We'll copy the variable cost as well. So please you can just keep your question till we finish this part, right? Just hold it, right? We'll still ask question, don't worry. We ask question. So
Please,
after
I just
sales,
please, it's a quick one, please. you're saying about it said something about not using net profit after whatever. But can we use contribution in place of that?
Yes, now you can use contribution. There's nothing bad in it because there's
Okay.
nothing bad in
All
it
right.
to use. But some working that I saw,
It's
I'm
okay.
seeing profits. I'm seeing profits. So that is why I have to contest that. That is not profit.
Okay.
Don't use profit for
All right.
capital projects, right? Thank you.
Thank
So,
you very much.
yeah, you're welcome. So this is the variable cost, right? So I don't want to stress myself by saying contribution, blah, blah, blah. I'm going straight to the fixed cost. To the fixed cost, right? To the what? To the, sorry. Oh, this is variable cost, right? Sorry. This is variable cost. Variable cost, right? Now, please pay attention, right? Another problem in this MPV is your arrangement. How do you arrange it? Do you get? So after this variable cost, there is fixed cost, right? There is fixed cost. We'll just pick it. Then we'll put it in thousands, right? There is fixed cost. I can't know the reason why it is 14 marks. They know, right? And what they put in this question is that inflation. Once you do not get that inflation, that's all. Fixed cost. Okay, fixed cost, right? So this is the fixed cost. So this one will be in thousands. Okay, we are still working on something, right? We are working on what we can use. Most especially this calculation cost like this, it's not that it's kind of stressful, right? But what is worth doing is worth doing well, right? So that's why we just have to do it this way. So after that, sales, variable cost, fixed cost, right? So you could say, let's say you say less. You can just put less here. Okay, we move on to, so just give me figure. Okay, the tax before that. So okay, so give me figure, please. Net cash flow before tax. Hello, class. Are we sleeping? Are we tired?
Okay.
Please don't be tired, please.
1588. One
One
million 588,000.
500 and
88,000. 588.
thank you. Next.
The second year,
1 million
I'm with you.
914.
1 million.
914.
Okay.
914,000.
Okay.
914.
Quickly.
1,448,000.
Okay.
448,000.
448,000.
1,890,000.
1,890,000.
Yes.
Yeah, thank you. Thank you all. So after that,
It's
there is
2,014,000. The last one.
is what?
2,029,000. 2,029,000.
Okay. 029. Okay. So what is the tax rate? The tax rate is 28% and it is being paid in arrears, right? 28%. So year one will be paid in year two. Is that not so? So please charge 28% of 1,588. 28% of 1,588. What do you have, class?
444, 445,
Mm-hmm.
444,
444.
640.
640.
Okay. Next. So charge 28% of 1,914.
535920.
535,920.
920.
Next.
You know, move your hand.
28% of 144.
405. 440.
105.
405.
405.
Okay.
440.
44.
440. Okay. If that is established, then we have net cash flow. Minus it. What do you have? Net cash flow
Excuse me, sir.
after tax.
Hello, sir. Can you hear me?
Yeah, I'm with you. Oh,
Yes, sir. Sir, I don't know. It's just a suggestion. I think we supposed to create additional year to
I
accommodate the
think I
tax
agree
of
with that.
this
no.
year. That's how they taught us in PM.
Okay, okay. For the last one, right?
Yes, sir. Yes, sir.
For the sake of the
Okay,
tax.
okay.
Mm.
To take effect. But do you know what? How many years for this project? How many
It's for
years?
because of the tax. We can't throw away that value. Mm.
Okay, that's fine. You can actually create that. That's fine. That's fine, but we will not use it because it is actually for 4 years, right? At least we know that the company the one of year 5 will be the one of year 4 will be paid in year 5. We already know that, right? So we can create it. So another thing is that sales proceed. We did not add sales proceed though, but they say they sold an asset, they disposed an asset. We didn't add it now, right? At the end of the year, right? They say they dispose an asset. Is that not so?
Yes.
Class.
Yes, sir.
Yeah, we didn't actually add the disposal before we do the tax. Of course, when you dispose an asset, you will pay tax. Definitely you will pay tax for the on the sales proceed, right? So on the last year, so we can say this is sales proceed or scrap value. Scrap value. I'm coming. Sales proceed or scrap value at the end of the year is 400,000, right? 400,000. That is the sales proceed. So which means that you need to that would be your inflow. Is that not so? So what do we have?
Situation matters because I'm thinking it's supposed to come maybe after tax rate. Or
No,
does it
after
not?
tax rates.
Yes, you now put the scrap value.
Won't you pay tax on it? Ah,
Okay. That's the
so
format I've been seeing so far.
okay, I'm coming. I'm coming.
Yeah.
Oluwapemisi,
Yes, thank you so much. Your tax.
I'm with you.
Yesterday she for drop the money with us.
Oluwapemisi, I'm with you.
Hello?
Yeah, I'm with you. I'm with you. Go ahead.
I said 28% of what?
28%,
28% of what gives
28% of one million
of
five
what?
eight eight. 1,588.
Oh, okay. Now I understand. Okay, year one will be paid in year two. Okay, thank you.
Hmm. Okay, I know some people are confused because of this car value, but we'll go back to PM. We'll go back to the way we usually do it, right? Don't worry. Don't worry. I'm coming. Rachel, let me give you this work. Quickly, give me the figure for the contribution. Or let's do it this way. Don't give me figure. Don't worry. Don't worry. So this scrap value will come first, yeah, because you have to pay tax. You have to pay tax on the scrap value, class. You have to pay tax on the scrap value. Scrap value will not come after tax. That means that you are not paying tax on it. You dispose an asset, right? Once you pay tax on that, on the money you generated on the sales proceed, you pay tax on it. That is why it has to be here. Right? Don't forget that this is less. This is less this. Is that not so? This is less this.
That the scrap
Right?
value is an addition and not a less.
Yes,
That's
yes. Yes, that is why I didn't you can see that there is no less here. Is that not so? It's an addition. Class, are we still together? So this value for this last one will actually change. Class, 6,930,000 minus 4,040,000 plus 400,000 minus 861. What do we have?
429,000.
What do you have?
2,429,000.
2,429,000. Thank you. Please, if you don't know how we calculate this tax, let me explain. Oh, year one will be paid in year two. 28% of this, it's what gives this. 28% of this, it's what gives this, right? 28% of this is what gives this. Then in the last year, in year 5, if the project still want to continue, it will be 28% of this that will be paid in year 5 when we get to year 5. But the project is for how many years? The project is for 4 years, right? So now net cash flow after tax, right? So the net cash flow after tax, this can be 1,588,000, right? So please, what do we have again? Minus it, please, minus. Please don't be tired, okay? Right? So what do you have?
146.
What do you have?
1 million.
Mm-hmm.
1,469,360.
469 360. Next.
$902,000.
902.
2,000.
Mm-hmm.
912. Sorry. 912.
Mm-hmm.
080.
0. Next.
2023560.
2023560.
23560.
Thank you. Okay. So you can see the way I'm arranging it. See, that is how it should be, class. This is how it should be. Now, the next thing is that you bring in if there is working capital, you bring in your working capital. Then you bring in your initial outlay, your tax savings, right? Your tax savings, your yearly tax savings, right? So we have the initial outlay, right? Initial outlay is 5 million, right? So after this initial outlay, there is tax savings of every year that they will have tax savings, right? So now let's quickly check. Please screenshot this tax savings: 350, 262, 500, 196, 875 days. Please screenshot it. Have you done that? Have you done that? Okay. Now let's move on. Thank you. So now quickly. So what is the tax savings for year one? It will be an addition. Tax savings for year one. What do you have?
We are paying that on year 1 and year 2, sir.
No. This is tax savings. It's not that one. It's the tax that you are going to pay that will be year 1 will be paid in year 2, year 2 will be paid in year 3.
So, sorry, sir. I thought the tax savings will follow the same principle since the tax are being paid in arrears.
Okay, that's fine. So the year 1 will be paid in year 2, right? Okay. So what do we
Yes.
have here?
350?
262,500. Okay. That's fine.
No.
Thank you. So okay, year 1. So what do we have here? Year 2. What do we have?
350,000.
350,000. Okay.
262,000.
Okay. 262 coming.
500.
Please, if you do not understand, let me know. 262 500.
500.
Okay. Please, if you don't understand, ask question. Oh, see, there is enough time. You can... Next, what do you have? Next, what do we have?
196,875.
One what?
196,875.
196,875.
875.
Okay. Thank you. So this is the tax savings, right? This is the what? Tax savings. Okay. Okay. If this is the tax savings, if this is the tax savings, so now what do you have here? This will be 5 million, right? So this will be 1,588,000, right? So this will be in bracket. Please add this together, add the year 2 together. What do you have? Because it is tax savings, right? Add the year 2 together because it is what? It is
1
tax
million.
savings. I'm coming. Okay. 2 hands. Okay, just hold on. I'm coming. Just hold on.
I am missing it.
Okay, what do you have here? Sorry, what do you have here?
1 million.
Sir, sorry, where you get the 5
819.
million from?
Where did I get what?
The 5 million, 5
The 5
million.
million
Is
is
it
the
from the
cost now. With the cost of this asset of the project E that you use to determine the tax savings. Comfort. This cost savings, the
okay?
5 million
Okay,
initial
sir.
cost. That is the initial
Okay.
cost. Next.
1 million.
Mm,
819,360.
819,360.
360.
Next.
1174.
74580.
1174580.
74580.
Okay. Okay. Next.
22,220,435.
Triple
Triple
two
two zero 435.
435. Thank you. So the next is the DCF, right? DCF. And the DCF is given in the question in money term, right?
Please,
So DCF.
the last figure you've not completed, sir.
Okay, I'm coming. So the DCF,
Triple,
I'm
triple
coming.
two zero
I'm
four
coming.
three five.
I'm coming, sir. So the DCF is what? 13%, right? Which is in money term because all our cash flow are in what? Are in money term. 13%. So we can use it to discount the project. Okay, you said this is not correct, right? So we have 00.
It's
Is that all?
triple, yeah, they won't add the zero. Triple two zero.
Triple 222.
It's just for you to add
Zero.
0.
220.
Yes.
Two
Then
million 222.
435.
Yes.
Like this.
435.
Okay.
Yes, then 435.
At the end,
Yes.
435. Like this.
435. 435, sir. Yes, remove the 435, not 430, sir. 435.
435. This is right. Okay. Okay. Quickly. All right. This is 1. So just give me this. What is the DCF for year 2? Year 0 is already 1. What is year 1, year 2, year 3, year 4? Quickly, class. Quickly.
Year 1.
0.
Year 1. 0.885.
I just need 1 decimal. 0. What?
9.
0.9.
Yeah, thank you. Next.
0.8.
0.8.
0.8. Next.
0.7.
0.7.
0.7. Next.
0.6.
0.6. Thank you so much. I appreciate that. Okay, now what would be the PV, the present value?
142,200 for year 2.
Okay, thank you. 142,900. Okay.
200.
200. Okay.
142,200.
Okay. Next. Exclusive. I'm coming. Oh, let me finish this thing first. Figure, please.
Year 4. 1332261. Year 4. 1332. Then 261.
Year 2. 1455488. 55488.
488. Okay.
Year 3.
Year 3.
822 206.
822
206.
206. Why we have to complete this question is because tomorrow there is no SFM, right? We'll not have SFM tomorrow. That will be in place of case study, right? So we are starting fresh topic on Saturday, which is bond valuation. So this is okay. Are we good? Are we good with this? Right. So the next one is the first one is 5 million. This is 5 million, right? Okay. Now, what would be the present value? What will the MPV? The MPV, quickly, what is the MPV? MPV. Madam Linda, are you still with us?
Yes, sir. Yes, sir.
Okay, no sleep for the wicked. All those Yoruba people that used to set wicked questions. No, they will not sleep.
NPV is what? Is 39,155.
339,000.
155.
155. Positive.
39,000, not 339. 39,000.
30.
Positive.
39,000. Okay. That is positive. Okay, exclusive.
Yes, please.
Okay, thank you. So exclusive.
So please, the tax for year 4 and the balancing allowance. I don't know how we treated it now.
Okay. How we treated it. Okay, we didn't treat it.
Okay. Okay, we ignored it.
Okay. Oh. Okay, now let's come back. Let's come back. Let's come back. Okay. Year one will be look here, look here. You can see that year one will be in year two. Is that not so? Year one will be in year two, which is 350. Is that not so? Year two will be in year one. Exclusive.
Yes, I can hear you. I can hear you, sir.
Okay. Year three will be in year four. What is year four? What is your year four? Oh, year four is what? 196 tax
Therefore,
savings.
is
196875. Abba. Year two is
Can do the math.
262,500.
yes.
Year three, I'm coming.
Therefore is
What did I say?
196.6.
Okay. That would be 196. I'm coming. 196. Oh. Okay. Oh. We've mixed this thing now. We've mixed it.
No. This the way it is okay, but I'm talking about the tax for year four and the balancing charge as well. That we did not recognize both of them.
The tax.
Yes,
I
for year four. So me, I feel like maybe we should have created a year
Yeah,
five so that
create it, exclusive. Create it,
okay.
exclusive. I mentioned it now. I mentioned it that you can create it, but do you actually need that particular year? Do you actually need it? No, you don't need
Because
it.
I
You are
think
so
So we need to because we have
Sir,
to
call
calculate
ends in 5 minutes.
and PV on them, then add it to the MPV
you say what?
because part of we still need to calculate them and do DCF on them and PV on them.
Okay,
They are part of the MPV because they are part of money you made in that year.
okay,
Call ends in 5 minutes, sir.
okay. That's fine. That's fine. Okay. Any other question again apart from this? Interesting.
the balancing allowance is what I'm also talking about.
Okay. Now the balancing allowance, the one of year, you can see that we said the based on the tax, is that not so? You can see, okay, let me check something. Okay, this call will end in 4 minutes. Okay, let me quickly create another link. We'll end this class by 11. Please, let's end this class by 11. Agreed? Agreed?
Agree
Yes,
there.
sir.
You say yes, sir.
Uh,
And they play.